getting started with your VAT in your system. We'll also look into the types and different kinds of VAT transactions that are applicable and that you encounter on a daily basis in your business. We'll also take a look at all the advanced entries and adjustments that you might come across. This is our knowledge series where you will get to learn topic by topic, everything around from the most basic of features to most crucial of business reports. My name is Praveen Kumar and I work with Tally Solutions in the media on a daily basis in your business. We'll also take a look at all the advanced entries and adjustments that you might come across in situations where you need to handle your VAT in your company. We'll also look into the 3 levels of prevention, detection, and correction methods that have been embedded in TallyPrime, so to minimize the human error in terms of VAT calculations. Finally, we'll also take a look at how easily you can prepare the VAT return form right from TallyPrime, and also how you can generate this 360, so total value 64,800. So here we have air freight charges 2,400. We'll also take a look. So those of you who are already on Tally ERP9, so I have highlighted few of the key differentiators when it comes to TallyPrime versus Tally ERP9. We'll also see how Tally helps in terms of preventing, detecting, and correcting the errors if that definitely occurs, and then also how to generate the return filing VAT 201 form and the audit form from the TallyPrime. So firstly, we'll be setting up of your VAT, types of transactions we'll look into, preparations of VAT, and return form. So we'll also look into how easy and kind of a cakewalk it is in terms of managing VAT or any other compliance when it comes to TallyPrime. So there are multiple types of transactions and there are a lot of VAT implications to it. So let's say when it comes to sales, we know that there are multiple types of sales that are possible. Could be a domestic exempt sale is possible. Different types of profit margin is there. Like let's say whenever I'm purchasing a used product like cars, second-hand used goods, and then I'm adding certain margin and then selling it. So how VAT is applicable on the profit only in this scenario, and how the transactions or imports within GCC and outside GCC exports and imports happen. So we'll take a look at all of these details. So in addition to this, as I mentioned, we'll also look into the advanced entries. That is, let's say, whenever we are importing, right? So the goods go through customs. Definitely the custom authority will charge a VAT and that is sorted. But when it comes to certain goods or certain services which you're importing, where it is not subject to customs, where reverse charge becomes applicable. In this case, how do you manage reverse charge mechanism in TallyPrime? And also, whatever the advance receipts you receive and the sale doesn't happen in the same quarter, when it is shifted to the next quarter, how these advance receipts can be managed in TallyPrime. So let me just switch to TallyPrime. So as you can see, this is the product. I've taken a sample company, Tally Solutions Private Limited, for the current financial period, which is Jan to December. So the first step is, once you start creating the company, how to set up or enable VAT. The first step is you can go to the company. So right here, you'll start finding the option called features. So once you enter on it, on the right hand side, you'll start seeing the option enable value added tax. So I've already made it yes. If in your case, if it is no, please make it yes. So once you've done it, here the tally starts asking you the questions as in, what is the emirate that your company is located in, what is the VAT number which is present in your VAT certificate, what is the registration, and how frequently are you supposed to file VAT to the FTA authority? Is it quarterly? Is it monthly? And here you'll also mention the VAT taxability. So, in cases where your company purely deals on zero rated products, you can simply set up zero rated here. If in case you completely and purely deal in exempt services or items, then you can select exempt. But in most of the cases, what happens is, as a company, we deal with a mix of all these items, right? So few of my items are taxable 5%, few of them are zero rated, few of them are exempt. So in this case, retain taxable 5% here and save it. So once you've done this, the second step would be to configure and set up your sales purchase taxable ledgers. So I'll go to ledgers here. So I have already selected a sales account or a sales ledger here. So right here also you have the option to give the command of taxability. So if you're dealing with multiple items or products which are, let's say, taxable also, and there are few items zero rated also, so we recommend to create two different sales ledgers. One is for sales taxable, and you keep the configuration as taxable 5% goods, and create a separate ledger for zero rated products by the name, let's say, sales zero rated, and then there in that ledger configure taxability as zero rated. Same goes for exempt as well. Alternatively, it also becomes important for you to cross check and verify the taxability in the item level. For example, let's say I'll go to this particular item. So even in the item level, you have the option to configure the taxability. So here also, depending upon their taxability, you can just configure whether they are taxable 5%, zero rated, or exempt. Once you have done these basic setup and configurations in your data, now we can quickly get started with the transactions. So let's say I'll go to vouchers here. I'll click on sales. So here I can, let's say I'm exporting to a different country. So let's say I'm exporting from UAE to Bahrain. I'll simply select Bahrain here. It's very important to mention the country in your respective customers and your supplier ledger masters. So the moment you can see here, the country here I've mentioned as Bahrain. So the moment you sell to this particular customer, Tally will automatically decide whether it is a domestic transaction within UAE or it is a export or an import, depending upon the country that you have configured in your master. So since I've said here Bahrain, if I'm doing a sales, Tally will automatically detect this as an export. So let's try that. So let's say I'll select Dell desktop here. I'll specify around, let's say, 15 of the quantities, 4,100 dirhams. So here, when I click on Alt A, which gives me the tax analysis, right? So here you can see the VAT information. So is it a domestic? Is it an export? What is a kind of VAT that is applicable? You will start seeing the information here. And also, once you click on F12, if you do want to modify any VAT information in that particular transaction or verify, you can enable this option, modify tax rate details for VAT. So once you enter on the product and enter the value, quantity and rate, automatically it starts giving you the information, whether it's a domestic taxable supplies or is it 5% is applicable, what is the taxable value, all of this information. Since this is an export, automatically the system detects it and starts treating it as export with, or let's say within intra GCC or an export. Both of that is fine. So I'll keep it as an export and then save this particular transaction. The next is, let's say we are doing a domestic supplies, right? So let's say it is Al Farhan IT providers. I go to the ledger master. Here there is already Dubai. So automatically, depending upon the country, Tally will identify and treat it as domestic or an export. So let's say here also I'm selecting certain products here. Let's say 15 of it, 34. It's a local supply. So here you can see automatically the system picks it up as domestic taxable supplies. 5% VAT is applicable. And here I'll add output VAT. Automatically the 5% VAT is charged. If in case you forget to charge VAT in this particular entry, so while you're trying to accept the transaction, Tally will identify that as per the law and as per the configuration, you're not recording a proper VAT entry. So automatically you'll get a prompt in Tally saying that a pop-up tax amount doesn't match with the value. So the user can immediately get an alert and then automatically re-verify the transaction whether it is recorded properly or not. So let's say once I see here, I'll come back and I see that I have missed charging VAT or adding the VAT ledger. I'll add it and save it. So this becomes a domestic local supply. Let's say we are purchasing from abroad, right? So whenever we are importing goods, there are certain implications to it. So let's say whenever we are importing goods, they come in containers. There are a lot of expenses added to it, like air freight charges are there, custom duty is charged, transportation expenses are charged, right? So in this case, how do I manage two things? One is how do I take care of VAT and how do I take care of the landed costing of the products? So here, let's say we are importing certain products from Almohad Trading from other country. Here, let's say the quantity is 180 liters, rate is 360, so total value 64,800. So here we have air freight charges 2,400, customs duty we have added here, transportation expenses we have added here, and then we have created something called control account landed cost to hit the landed costing of the particular product. So this particular ledger comes under current liabilities. And then here you will net off all those additional expenses that you have incurred right here. So you can see the purchase invoice value will match, and also the additional costing that you have incurred also will hit the total landed costing of your items that you are importing. So once you have done this particular transaction, the next step would be to take care of your landed costing. That is, you'll debit your control account landed costing. You'll bifurcate the VAT for the service the clearing agent will charge, right? So let's say in this case, it is DLG clearing and freight forwarding agent who will clear the goods at the board at the port on behalf of your company. So the service they charge, we can add it here. If there is any service charge, definitely, like let's say they charge you around 5,000 dirhams or 3,000 dirhams for the service of doing this and the VAT on it. And then you'll also debit your control account landed costing since the clearing agent would have paid the air, freight, insurance, all of these charges on behalf of you. Okay. So once you've recorded this, then you will record a simple payment entry to the clearing agent. So this covers your complete total cycle of your imports when you're importing from other countries. Now, the next step would be, let's say in this case, I am not importing any goods. I am rather importing services, right? So let's say I will select one of my suppliers. Let's say it is, I'll create one from Saudi. Let's say it is Gulf Traders from KSA, country creators. And here in the country, I'll specify as Saudi. Okay. So here the region I'll select as, let's say it's in Riyadh. I'll give the details as Riyadh and I will save this particular supplier. So let's say we are purchasing certain consultation services, right? So here I'll add consultation services, which is around, let's say 15,000, right? So in this case, what happens is, since it is not a goods, there is no way it can come to the port and the custom duty can be cleared or anything. This is a pure service which is done through online or digital media platforms, like even like let's say marketing services they are providing, or let's say consultation services providing, let's say business analytical advisors or business advisors service they are providing, could be any kind of service. So in this case, what happens? This transaction will become subject to something called reverse charge mechanism, right? So in this case, we'll also have to mention the place of supplier. Let's say this is import taxable, and I will save it. So any import that is subject to reverse charge will appear in a separate report that we have provided in TallyPrime. So that is, if you go to display VAT reports, if you go to this particular screen, you'll find reverse charge report. So once you enter on that, you can find the transaction what we have done, which is we have imported certain services from a supplier in Saudi worth 15,000 dirhams, on which 5% VAT is or applicable. So if you see the transaction, we haven't added any VAT ledger or charged any VAT here. The system knows it's not cleared, and hence the reverse charge is applicable on this particular import. So now you can see at the bottom, the taxable amount is 15,000. The total liability on this is 750. Liability booked column stays empty, right? So if you check the VAT return, VAT 201, you will not find any reverse charge entry applicable here, right? We are not able to see anything related to reverse charge. So this particular transaction is appearing here. Let's say it is appearing in my imports, right? It is appearing in my imports. You can see here the consultation service charge 15,000 is appearing here. But you can see the VAT is not being accounted in my VAT return form. Though my import of service is appearing, but the VAT is not accounted here. Since it's a reverse charge, you need to do a special transaction, or let's say adjustment entry, for you to account the 750 and bring it into your VAT return and declare it as reverse charge mechanism applicable to this particular entry. So what you need to do, click on stat adjustment on the right hand side here, right? So there are three flags given. So one is, if you want to say, okay, I have to pay 750 dirhams VAT on this import, you can select this particular flag and record the journal entry. And at the same time, we know that reverse charge mechanism, once you create, let's say output VAT, record a transaction saying output VAT of 750 has to be paid. At the same time, to knock that balance off, you also need to record increase in input tax flag, because the net effect of reverse charge mechanism is zero. You'll create a liability of plus 5% VAT, and also you'll knock it off with minus 5% VAT at the same time. So to do both, you will select this particular flag, which is increase of tax liability and input tax credit. You'll clearly specify here as imports. Is it declared to customs? Definitely it's not. And here you will debit output VAT ledger. The taxable value was 15,000. You'll mention it here, and you'll mention 750 as the VAT value. And at the same time, you will input VAT your input VAT ledger. You'll credit it. So what happens is it just shows as a notional entry where it is plus 750 and minus 750. So once you save the transaction, if you go to reverse charge report, you can see the balance liability is zero. And here you can see the liability booked is 750. So now if you come back to the VAT return form 201, you'll start seeing the reverse charge entry here, which says output VAT 750. At the same time, here at the bottom, you'll also see reverse charge input VAT 750. So the VAT payable or refundable amount hasn't changed by a single dirham. It stays as it is. This is just a declaration entry that you must do and declare in your VAT form. The next scenario would be, let's say we have received the advance value in this particular quarter, tax filing quarter. But let's say we haven't raised any tax invoice. Let's say customer came, he gave us, let's say, 1,500 dirhams, 10,500 dirhams of advanced money, and he told he will let us know when he needs the goods, maybe next month or next, let's say, in maybe 2 or 3 months, whenever it is. In this case, when the advance is received in one tax filing quarter, but the sale transaction happens in a different or a next tax filing quarter, then you'll have to account something called advanced tax receipts. So what you'll do is you'll come to voucher, you'll click on receipt. If it is a normal receipt, you'll raise it as it is. But since here it's advanced tax receipt that you're going to raise, you'll record it as, let's say, it is received in terms of cash or bank, whatever it is. You'll click on this main option, start adjustment here. Once you click on this, it'll ask you, is it an advance receipt? You'll declare yes, it is an advance receipt subject to tax. And here, from which customer have you received? Let's say we have received from Al Rafi Plastics. Let's say we have received a total of 10,500. We'll mention here. So the tally will automatically bifurcate that out of this advance you have received, 5% VAT has to be paid to the department. So you will save it as an advance. Now, where can you see this receipt when it comes to VAT? You'll go to display, you'll go to VAT reports again. Right above the reverse charge report, you'll see advance receipt report as well. So all the advances that you have received, which is subject to VAT, will start appearing here, right? So, but when you go to VAT return, you'll not start seeing anything related to advance receipt, right? You'll not see its VATability or its impact on your VAT return. So to bring it to the VAT return and show, yes, we have to pay 500 dirhams of VAT on this particular advance received, you'll have to record a stat adjustment. On the right hand side, you can see stat adjustment here. The entire value of this particular bucket has to reflect in liability booked, and it will start reflecting in your VAT report 201. So once I click on stat adjustment, you can see here increase of tax liability. Yes, we have to bring it to our output VAT in our VAT return 201 form. So I'll select increase of tax liability on account of advance receipt. So let's say the emirate that customer is let's say Dubai. So here what you'll do, you'll debit a ledger called tax on advance receipt. This I have created. Maybe in your system it might not be there. So just create this particular ledger. You can give any familiar name that you want. You will map it under other current assets. You will save it. So here, since a total of 500 dirhams is what we have received and accommodated as VAT, and here I'll create my output VAT. So taxable value was 10,000. So once you save this particular transaction, you can see the entire value is reflecting properly in our liability booked, and there is nothing balance to be booked. And when I come to VAT report 201, you can see the advance receipt is appearing right here. So it says that we have received a total of 10,000 value. We have accommodated and put here, and payable to department is 500 dirhams of VAT. But the sales or a tax invoice is not yet raised. So let's say when the customer comes in, okay, fine. Now I need the goods, right? So what you will do is you'll go and raise a tax invoice. I'll go to voucher. I'll go to sales. It is the party was Al Rafi Plastics WL sales. Let's say I'll select this particular item. Quantity, let's say it was 100. Rate was, let's say it is 100 as well. So it is 10,000. So here I'll add output VAT. So if you see, this customer had already paid us 10,500, out of which 500 we paid to the department as advanced VAT, tax on receipt received. But when I raise a tax invoice, again 500 I am charging here, right? So what it becomes is, it becomes dual taxation. Double time we are charging and paying to the department 500, dirhams. So what you have to do is, so once you've raised the tax invoice, you will have to go to your uh, stat adjustments and raise a cancellation of advance tax receipt. So I'll go to the same report, that is our VAT report, display, VAT reports. You can see here in the advance report, clearly 500 we have accounted. When I come to VAT report 201, here also I can see 500. Now you can see the total VAT payable because of the invoice which we raised for 10,500. You can see 500 VAT is added here. You can see the transaction is appearing here. Al Rafi Plastics, 10,000 is the taxable value, 500 amount is here. So 500 is there here also, and 500 is there in terms of advance receipt also. So it is 2 times the tax has been accounted here. So to cancel this, you will have to record a stat adjustment. I'll click right here. Last time we took increase of tax liability, but this time we are taking decrease because we have to knock it off. I'll say decrease of tax liability. Here I can say cancellation of tax liability for advance receipts. I'll select this. Let's say the Emirates was Dubai. So here I'll do a reverse of that original entry, which is my debit my output VAT. Taxable value was 10,000. The VAT was 500. And here I'll credit my tax on advance receipt ledger, right? So I'll save this particular transaction. So now when I come back, you can see in the VAT return form, it is knocked off. You're not seeing any advance receipt, and VAT is accounted only once from the tax invoice that you raised to Al Rafi Plastics WLL. So in this way, you can handle the imports, you can handle the reverse charge applicable transactions, and also the advance tax that you have received. The next is, as I mentioned earlier, while we were recording the sales invoice, like let's say domestic, we had to charge 5% VAT. Due to human error, which is always expected, chances are you might forget to charge VAT, or you might not charge exactly 5%. You might undercharge VAT or overcharge more than 5%, which all comes under errors, which is all wrong. And those transactions should not be uploaded or filed in the VAT return. All those transactions which have any of these errors will fall under this bucket called uncertain transactions. Any transaction that you record in your company which is relevant to VAT return and you need to declare in VAT return, it will appear in this particular bucket. Any transaction which is not relevant, which department doesn't want, which you need not show in your VAT return, will fall under this bucket, which is not relevant for this return. So like example, let's say you go and deposit certain cash into your company's bank, or you withdraw, or let's say you pay to your supplier. All of these transactions have nothing to do with your VAT return. So all of this will fall under your not relevant for this return. But you need to take care of uncertain transactions. This particular bucket contains all those transactions where there is potential tax errors, or there is potential tax information missing, right? So once you enter on it, Tally will give you a clear information as to what is the error in this particular transaction. As you can clearly see here, it is mismatch due to tax amount modified. So there is a mismatch in terms of VAT amount. So here I can see we were supposed to charge 170 dirhams VAT as per the 5% calculation. 5% of 3,400 is 170. But instead of 170, we charge 150, which is wrong. So in this case, there are two ways to take it up. One is, if you've already issued a tax invoice to customer, you cannot modify here, because if you modify here, it will alter your voucher as well. It will alter the sales tax invoice as well. So if you've already issued the tax invoice to customer, you cannot modify here. You can click on create adjustment, and you have to treat it as an expense of your company, and you have to absorb it. But if you're not issued to your customer any tax invoice, you just came here, checked, you found the error, simply click enter on it and alter it. So this will change the details in your voucher as well. So once you save it, the error is rectified. You can see now your taxable supply value has increased. Now even that 170 dirham has been added here. So Tally will automatically bifurcate among your sales, domestic supplies, zero rated supplies, within GCC any transactions happened, reverse charge, advance receipts, same goes to purchase as well. And then automatically it will take your total output VAT, let's say 1144 1445.50, and also take in account of your input VAT and show you whether you're supposed to pay to department or you're supposed to get a refund from the department. So here you can see balance VAT payable is 505 for this quarter. So let's say, oh, fine, I have to make the VAT payment. I'll click on start payment here. At the bottom, you can see it's not a normal payment, it's a VAT payment. So I'll select for which quarter I'm paying, right? So it's a regular VAT payment. And here I'll select how am I paying. Let's say I'm paying through my bank, and I'll select my output VAT. Automatically, the payable VAT comes in, and I will save it. So once you've saved, you can see here balance VAT payable has shifted to VAT paid. So once the entire return is done, once you've filed, you're done with the quarter, just click on save return, so that if in future any of the user in your company goes back and alters any transaction, mix any changes in the previous quarter transaction, automatically you will start seeing it. So once you click on save return, the return will be saved. So once you go to VAT return, you can see at the top information is return is saved. So if anybody changes any transaction, for example, let's say we will make one change here. Let's say one of our sales will go and alter. Let's say it happens by mistake, or let's say however it is. So let's say I'll remove this item. Okay. And I will save it. So once I come back, you can see here, it changes the information. Like if you come to VAT 201 for that quarter, October to December, it says the return values might have been changed. Press Alt W to recompute. So clearly, whatever changes somebody does after you have filed the VAT return and save the return from here, if any changes happen, Tally identifies and show the information right here. So then you can investigate the transaction and then take action accordingly. And then also we discussed that we'll also see how to generate the audit file. So before generating the audit file, please do ensure here information required to generate audit file not provided. You fix this particular issue. So once I enter on this, you can see there are certain transactions with improper valid TRN, and in certain transactions there is no original invoice number and date, right? So you have to rectify all of these errors before you generate the audit file and submit to the authority. So how you can submit the audit file? I'll just not fix the errors here. I'll just directly show you how you can generate the audit file. Click on exception reports. Sorry, click on change view here, and you'll start seeing the audit file. Select that particular audit file. At the top, you have the option export. So once you click on export, you can select audit file, and then it will export into ACSCI format and create your audit files. I can just export it. And here you can see the audit file is created. This particular file. So like this, you can handle a complete end-to-end solution. And then in Tally, we also have given the same exact format that is prescribed by FTA as a return form. So I can simply click on Alt E here, export. You can see the return form here. So once I enter, it'll ask and take the company information. So this is the exact VAT return format that the department FTA authority has defined for all the companies in UAE. So all the information will automatically be captured from the Tally figures. You just need to re-verify this with your tax consultant for any changes, and then simply plug in the numbers in your VAT or Emirate tax portal. So right. So guys, I think with this we have covered all the topics that we need to discuss. So right now, I'll just launch a quick poll. So you can provide as a candidate feedback as to how the session was. It will start appearing on your screen. So I've just launched a quick poll. So please do provide us with your candidate feedback as to how the session was and if there is any improvement. Yes. So this will definitely help us to improve our future sessions as per your feedback and make any changes in terms of making it better for your knowledge. So post this poll, we will dive into the Q&A. So those who have already participated in the poll, please start typing your questions in your Zoom control panel. So we'll quickly take them up. So guys, I request all of you to provide as many feedbacks as possible so that definitely it will play a huge role in terms of us improving our sessions in future. And those of you who already participated in poll, please type your questions in the Q&A control panel, or you can simply raise your hand. So I'll unmute and you can directly ask your questions to me. All right, I think uh, the poll is done. So let us quickly dive into the Q&A. So Idris has mentioned, please also focus on the withhold tax, which has different tax rate for import and local transaction like 3%, 2%. So sir, see, in UAE, there is only 1% or one rate of tax, which is 5%. So I'm not exactly sure as to where the 3%, 2% is coming in. So please do let us know. We have a question. Sometimes we raise the invoice to Bahrain, but supplier at our warehouse VAT is charged. And then in that case, is the tally automatically changed to local transaction or else we have to overwrite the auto selected detail in tally? So, sir, whenever you're raising an invoice to Bahrain supplier, right? So there is a place of supply applicability. So once you select party name and enter, so here you can see the party name. So once you select him and enter, automatically you'll get a pop-up where it reconfirms your VAT information, country of your customer, all of that. So there you also have place of supply. So if you mention the place of supply is Bahrain, automatically Tally starts treating it as an export itself, and it will not treat as local transaction. If you do want to treat it as a local transaction, though the billing is happening to Bahrain, just change the place of supply back to UAE. I hope that helps. How to set up formula for taxes before total and after total? So, sir, there is no anything as a formula to set up. But let's say you're recording a transaction. Let's say you selected an item, which is let's say 1,000 dirham. There you have to give discount, which should be after before tax, right? So the discount should be on the value. The taxable value should be after discount. In this case, what you'll do, let's say the item is 1,000 dirhams, you're giving a discount of 100 dirhams. The VAT automatically will calculate on 900 dirhams in tally. The only difference is you have to go to discount ledger and configure there as include in VAT calculations. Do you have Oman VAT return format in tally? So, sir, go to the VAT report. Right there, if you click on export, you should be able to find if already the Oman VAT return format is provided in tally. Mr. Bijoy, you mentioned that tally configuration screen is not showing the return duration. So, sir, kindly just check because by default it does definitely show the duration screen, which return you are currently operating on. Yes, Mr. Savila Josh, that we'll definitely have a lot of repeated sessions and different topics as well every month on month. You can visit our website and click on events and webinars. You'll find all the schedule that we have. Definitely. So we do, as I mentioned, we do conduct frequent sessions. So you can just check at what time, what period time, topic by topic we are taking, or basic thing we are taking, and based upon it, you can just join our sessions. Also, meanwhile, you can take help of help.tallysolutions.com, where you'll find a lot of articles with screenshots as to how to use Tally, different topics, and also a lot of videos is available. What is audit file not provided means? So, sir, it means that information required in audit file is not provided, like your customer's VAT number, your supplier's VAT number, or let's say when you're purchasing, the purchase invoice and supplier date, when the purchase invoice number and date, it's not provided. So any such information that is missing, it will highlight as information required to generate audit file is not provided. What if we receive a purchase invoice in same invoice? Some of the items are exempt and some of the items have VAT. So, sir, in that case, simply go to the item master, configure whether that item is taxable or zero rated or exempt. Automatically, Tally will charge VAT only for those items which is VATable, and for the rest of the item which is zero rated or exempt, Tally will not charge VAT. You can simply configure this taxability in the item level. Okay, can you please describe the first three heads in VAT return: included in return, not relevant in return? So, sir, basically, you can see here, included in return means those transactions which are displayed and declared in your VAT return 201. Not relevant are those transactions which are not relevant, not required to be declared in your VAT form 201. Uncertain are those transactions which should be declared in VAT form, but they have some errors in them. Maybe VAT is not properly charged, or maybe VAT information is missing. Any such errors, it will put under bucket uncertain transaction, which you have to rectify and correct before filing your VAT return. The next question is, why we can't amend the VAT information of invalid TRR number changed to unregistered in the audit file? Sir, audit file, you can definitely change. You can just open the text file and you can change there in audit file, but it is not recommended. It is rather recommended to change in Tally so that it will not repeat the error in next quarter also for the same customer. When we book purchase invoice for fixed assets, which is in the balance sheet item, the VAT is not charged. So, sir, definitely, even for the fixed asset, you can definitely charge VAT. So, kindly just check the fixed asset F12 configuration. The VAT would be provided there. Okay, Mr. Brahmakumar has mentioned that VAT adjustment entry is not visible in correction section. So, sir, VAT adjustment entry will not appear in correction section. Rather, I think it will most probably appear in not relevant to VAT return. If it is not working, definitely then you have to check the correctness of that entry. So, probably somewhere VAT configuration, the ledger or the transaction might be missing or it's not proper. Mr. Anwar, yes, definitely. You can get monthly wise VAT return as well. Just go to F11 feature in TallyPrime and then configure your periodicity as monthly instead of quarterly. That's it. Mr. Idris has asked, please highlight tax out of GCC. Mr. Idris, I would like to ask like exactly from which country you are so that we can plan accordingly. And also I can stress and highlight more on that particular country's tax. Reverse charge once again, please. So, sir, reverse charge basically applies on, let me just switch to TallyPrime. Reverse charge applies to all those transactions which are not coming through the port, or specifically, let's say, most of the scenario, it is applicable to the services only, right? It sometimes it is applicable to the goods as well. So, whatever transactions that are subject to reverse charge starts appearing in this reverse charge report. And here at the bottom, you need to ensure that complete balance liability is shifted and booked in liability booked. To do that, you need to record an adjustment entry, which is the journal voucher, where you have to set the flag as increase of tax liability and input tax credit, where you debit output VAT and credit input VAT for the tax amount. That is it. So I see in the bowl that many of you are already using TallyPrime. So many of you are, I see that they are interested in terms of quickly switching from older version of Tally ERP9 or TallyPrime to the latest versions. So definitely you just need to take care of your Tally software subscription, which also provides you the Tally reports on web browser capability. So let's say you're always on the move, or you're as a business owner, you're moving different locations, or you're traveling frequently. So we have a facility, Tally report on web browser, could be your mobile phone, tablets, PCs, any device that you have. You can simply log in your browser, Google Chrome or Microsoft Safari or any other browser with your credentials in our website, and you can quickly start accessing real-time business reports right from your gadgets. So yes, we always believe in terms of data security. So where the data is always with you, which is why there is no cloud or anywhere, any place that we take your business data. You can always have a peace of mind that your data is always with you and it is secure. So many of you wanted to shift to the latest versions of Tally Prime. So please do ensure that you renew the Tally software subscription of your Tally serials. So the first benefit you get is definitely you get the access to access any of your business reports anywhere. And then you also have the access to the regular and frequent updates that we give for TallyPrime. And also you'll experience the seamless banking and payment services. And also in case where you have multiple locations spread across, you can enjoy the synchronization facility. So those of you are using Tally ERP9 and TallyPrime, you can easily see the differentiating factors that TallyPrime 4.0 has when compared to the older releases. How do we cancel advance tax receipt if we received advance payment in one tax period and tax invoice issued in another return period? So, sir, see, you need to do is just go to stat adjustment, record a journal, right? Where you'll select the flag as decrease of tax liability. That should be the main flag. And the sub flag will be cancellation of tax on advance receipts. You will debit your output VAT ledger, and then you'll credit your tax on advance receipt ledger. This is the transaction to cancel it. When we migrate from monthly return to quarterly return or vice versa, when we preview the reports, they are displayed as current status of report. Can we have a period lock for the date of change of VAT return? So, sir, we do not have a period lock, right? But also, if you want to restrict the users from accessing for a certain period, you can definitely make use of security control where you can give a cutoff date for your backdated transactions. You can lock those periods for the specific users, but you cannot have a period lock for the VAT return or change of VAT return dates. But yes, transactions, you can do it. So what are the ways that you can renew your TSS? you can get in touch with your nearest Tally partners, or you can dial us our Tally Care, or you can even visit our website and renew there as well. So, guys, if you have any question, please do type it in the chat box, or you can simply unmute yourself and straight away ask me as well. Mr. Reggie, so sir, I'm sorry that I'll not be able to share my contact with you, but definitely you can get in touch with your nearest Tally partner, so they'll be able to help you on what are the queries you have, or you can simply dial us at 800 Tally from UAE. So guys, if there are any questions, please do let us know. So I think there are no further questions. So thanks again for joining us today. I hope the session taken today definitely has helped you in terms of getting a better understanding and looking at all the features that Tally has in terms of compliance related VAT in specifically UAE. So thanks again, guys, for joining. Have a great. We wish you a great business year ahead and have a great day as well. Thank you. Stay safe, guys. Stay positive. Stay compliant. Thank you all.